What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, show that I do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's video going to be very quick and to the point, no time stamps because I'm going to flow through the charts. We got a lot to talk about, but it's going to be very condensed. So let's just go ahead and get into the show. All right, welcome back. A rather flat day in the markets. You can see here is the market dashboard that we typically look at. I want to look at the sectors and call out one thing. Utilities, interestingly, is still holding that top spot as of the last 3 trading days between today, yesterday, and then also Friday. So it's still showing some signs of strength, but is in these areas of resistance. This is something that we need to keep a close eye on to see if this is just a short-term thing or if this is a potential change in trend. Oh my gosh, say that 5 times fast. So we're gonna keep a close eye on what's developing there because the relative performance of utilities towards the SPY, if that continues to grow, you'll see the rate of change in one of our indicators, it's not going to be on today's show, continue to build into a risk-off environment, which means that we should be obviously trading around the markets with more caution. And you can kind of see the amount of chop that's been taking place suggests, it's just a very hectic environment to try to peel profits from currently. Now, the VIX, I want to call out, did press lower today into that 20 target. Now, when it goes lower like this into this range, you typically got a lot of ill-informed market participants chasing runs up in the market. So, for example, the S&P 500 hit an all-time high yesterday. If you were to have chased that and not get that really kind of confirmed previous resistance breakout for a couple of trading days, you would have seen a little bit of a down day today. And perhaps maybe you did in individual stocks, or maybe there are some individual names that are performing quite well. There always is, in the basket of names. But I want to point that out. The VIX, while it's shooting lower and lower, you typically get more people wanting to chase individual names or chase into things when there's sometimes more downside risk, there's more risk to the downside than there is potential gain to the upside. Now we're running into this area of support. We're still a low target of around, I'd say 1835. That would be the lower Bollinger Band. We did form a little bit of a hammer candle here. So remember what I said, when we come into this range, this is an area where, okay, pump the brakes a little bit. Let's make sure we're trading quality setups or getting into, quality investments, whatever your case specifically is for you. But this is where I pump the brakes a little bit because as of recently, we can only go back to what data we have. When it hits into this 20 range, we've seen some pretty big run-ups, which cause individual market volatility to increase, where you see some individual stocks or the indices, various sectors go down. Now, I want to look at the Qs here. The Qs, we were breaking above to make a new high right here, and I called this out on Twitter. If you don't follow me there, you can follow me there, and I'll show you the 30-minute time frame. But I call it right when we were hitting that area of resistance, letting everyone know that is a specific pattern, which I'll get into. But we're in that area of resistance. Resistance did hold. This candle, not the greatest looking candle. Now I want to point out a couple things. Not only was it resistance on this previous high, so we did not break that high, so it's still lower highs. It was also confluence with the 61.8% retracement level, and we closed on the 50-period moving average, so it's a little uncertain there. From a bullish perspective, long-term context on the chart, the 200-day moving average is still sloping up. You're getting a little confusion right here, which could be a period of distribution to a potential decline. We don't know yet because it has not been confirmed with the moving averages right here. And then you see the price percent oscillator did cross over, so it's a bullish crossover, still below 0. It's a good sign right now, but it's not that great of a sign being that it's still below 0. I like to see it above 0 and trending up, but this could be the early stages of a potential bigger move, but it has not yet been confirmed yet. We need to get above this 325, let's call it, and hold there for a couple of days to really show some strength. Now, when we look at the 30-minute time frame, you'll see here, this is the chart that I showed on Twitter right when it was kind of getting rejected right here, probably around this portion of time. Inverse head and shoulders. So this could be building momentum to potentially break that inverse head and shoulders, and that could really set the trajectory move to easily target 338 here on the Q. So be on the lookout for that. This rejection right here, notice here how it filled the gap from the day. So we gapped up, rejected, moved down. But if you take the context of other trading days, this could be a pull and this could be a flag pattern. All right, so we're in inverse head and shoulders. We had the 50 period below us that crossed above the 200, this little short-term golden cross. They're starting to curve themselves up. This could be very well a bull flag that helps, kind of give the bulls more context of a potential speculative breakout here. I'm waiting for confirmations before really doing anything. And then I'm very, very quick to take profits. And also on top of that, I manage my stops effectively because I've seen too many false breakouts in this current environment. But when you do get that continuation move on a breakout, some of those can be very beneficial. From a internal aspect, the BP NDX, I want to take a look at. We called out this bullish divergence here, and we've clearly seen the run up. So awesome if you were watching that. This market internal works very well. That's why I use it. And we're running into this wall of resistance. Not necessarily, it's not necessarily resistance yet. It's been acting as a level of resistance. However, like I've been saying here on the previous chart, perhaps if this is a bull flag and we break through this neckline, that is going to shoot this RSI past this blue line, which can move us more towards that 70 threshold, which would then indicate that we're overbought. What does that mean from a perspective on the Qs? Well, that could very well mean that we break above the neckline, potentially retest the 61.8% retracement level, find that area because it was resistance. If we break above it, it then could become an area of support. So what I'm kind of thinking, this is just not necessarily predicting, but preparing for if it were to happen, is if we do break that neckline, that is a bull flag, we start to run up, perhaps watch for a overextended move over 70, and then perhaps a back test of that 326 to, 322 retracement level here, because once it breaks it, holds it, maybe back test it, and then potentially moves higher into April, which would match seasonality. So that's kind of what I am thinking from a trading perspective, just letting you in on my, what I'm thinking, what I see, which is not always right. But let me actually add on to that. So I'm reading a book, How to Decide by Andy Duke right now. And something very important about this is looking at decisions versus outcomes, all right? And this is very important in the markets to think of, because a lot of the decisions that we make, they could be good, they could be bad based on whatever outcome we want. But do not look at the outcome of an individual trade as you made, like, for example, if I were to say I go long right here on a breakout, and because of the context of it's a bull flag, that makes sense to me, I break out, but then it breaks down, that doesn't mean that it was a bad decision. It means that it was just a bad outcome. So you want to focus heavily on your decisions and then not worry so much about the outcome, but be prepared for multiple different outcomes to take place. And that's why we use technical analysis. It helps us in our decision-making process, and then we can feel confident moving into a position. And even if that position has an outcome that we did not predict, although we probably have thought of, because that's what technical analysis does for us. Like for example, right here, this breakout. On this breakout, we said a good potential outcome on this breakout would be a back test, and you could enter in and have a stop loss. I did that on a couple videos ago. And if you did that, you would have came up and you would have been benefited from that move. So also what could have happened is we could have came on the back test, we could have entered, and then we could have got stopped out, and then it could have fell apart, or we could have got stopped out and then it moved higher. So, there's all kinds of different outcomes, but make sure the decision behind it is a quality decision. So I went on a rant there, but decision versus outcome. Don't get hung up so much on the outcomes. Focus on what made you make that decision, and was that decision a good decision for whatever it is that you value. So I'm looking at the 30-year right now. We're running into this area of resistance, very overbought here too. I'm thinking that these yields are going to have to take a break here and not just continue this rampant run up, despite what some people may believe. That's kind of where my thought is at. I still think that the original, like the target here on the 10-year, it can go up all the way to 1.9, but we're very overbought. I'm thinking here, I'm just thinking that there's going to be a pause in rates, which could put less pressure on these tech stocks. We will see how this, plays out. Also on the TLH, you can look at the TLT. I'm just looking at the TLH, the 10 to 20 years. Positive divergence, so it's showing some internal strength as the market is putting in lower lows here. However, and it's also running into an area of support. This tells me It doesn't mean that they can't continue to fall, but it seems to me like a short-term bottom is being placed in. And I could be completely wrong, but based on what I'm seeing on the chart, seeing some strength in the RSI, seeing some overextended moves to the downside, I'm thinking that this is a temporary bottom. If not a long-term bottom, I don't know yet, but right now it just seems like there's going to be some breaths taken here on the yields and also the bonds. The dollar, this could be potentially flagging to break over 92. That could put pressure on equities, especially if shorts begin to cover and we get some sort of squeeze. But right now we're still below 92. Now, if we want to see, gold, silver, if we want to see various commodities continue their rampant run up, it would be beneficial, obviously, for the dollar to continue fall. You see these correlations in the market take place. But from a technical perspective, this is a solid breakout. And now we're just kind of flagging around this 92 level. So it's very flat on the week so far. We're up slightly. So let's see how the week really finishes out. This is a weekly perspective. Then oil right here too is also in this pennant pattern, been kind of just hovering around this 64 range. The price percent oscillator is bearish crossover, so that's not the greatest look. As the dollar's finding some strength here, this could be an easy breakdown past 64 and then go into that 60 range. However, if the dollar does find some weakness, if we start seeing that start to sink again, I think that this, given the context of this chart, 50 sloping up, 200 sloping up, higher lows, higher highs, this could, from a technical perspective, be a solid breakout, but we need confirmation. You can see the energy sector got hit very hard today. Okay, so we go back to the market dashboard, look at energy at the bottom. Now, this doesn't mean that energy is going to just hold at the bottom. This can flip to the very top by tomorrow. That's how fast these things, could kind of move, ebb and flow. So it's just look at these patterns. So, for example, if you're a fan of energy, I would say, okay, let's wait to see if we can get this confirmed pennant breakout to the upside, and then let's find any good energy setups that would make sense to us. And then you could also keep an eye on the dollar while that's going. Now, last chart of the day, lumber to gold ratio continues to sink here. Still, this is a weekly time frame, so I'm just giving you we're following this as it goes. But the rate of change we got to pay attention to. Once it goes below zero, that's part of that lumber to gold trading strategy developed by Michael Gayad on one of the interviews that we had. If it goes below zero, that is a risk-off environment. It does not mean that stocks can't go up anymore. But what it tells us is that the conditions are changing, the environment is changing. This is where we need to be very diligent. So we use the driving example. So if you're driving down the road and you're here and the risk-off is below, it's on risk-off, it's below zero, there might be some more, might be very rainy, stormy, tornado type weather. Doesn't mean that we're going to be affected by it, but the possibilities for an accident to occur are greatly increased. So we're not there yet. We're still risk on, but just notice the atmosphere is changing a little bit as these days have been progressing. And not to mention, we're not there yet, right? So don't freak out. We're not there yet. However, you can see some subtle changes shifting beneath the surface. So keep an eye on utilities. We'll keep on an eye on the rate of change there, also on the lumber to gold ratio. That's all I really have on today's episode. I hope it helped out. And I will be back more in depth probably tomorrow. If not, I might continue a couple more episodes that are a little bit more condensed just because of my current just stuff that's going on right now between my work and just personal stuff. I'll get more into detail on all of that as I'm kind of trying to get through this current season. Hope everyone has a nice day, and I will see you back on the next episode.